Good morning, everyone. Good morning. Good morning. Inviting our panelists to come to the presentation area so that we can mic you. We will be live in about 20 minutes.
Yeah. And what a rose. Yeah. Yeah. For look a little bit. I'll lose in the bottom quarter, but I think. Yeah, yeah.
Okay, all right.
Yeah,
All right.
if I didn't know, move it again, I'm all right.
I can't because the light is right. Let's try.
Yeah, not as good, but
No, no, turn around. The
yeah,
light
that's
is right.
perfect. That's good for me, and should be okay for me.
Hold on, hold on.
All right.
Let me do this now.
I joined in 2017 as a CFO.
Yes, miss.
I became CEO in 2021. January. I keep thinking, was it 2020 or 2021? I think it's 2021.
I am not in touch with anybody. Okay.
Edmund. I'm going now. Yeah. With Benny. Yes, my everyone. I'm good. Good to see you. Yeah, very good. How are you? Mark, sure, sure. I'll reach out. I'm good, man. Here? Wait a minute. Mark. Copy of my presentation.
morning. Morning, ladies and gentlemen. Good morning, ladies and gentlemen. Michael, welcome to the Jamaica Chamber of Commerce GK Capital Management release of the second quarter Business and Consumer Confidence Indices. My name is Andre Gooden. I am the chairman of the Jamaica Conference Board, and on behalf of the Chamber, I'm happy once again to be hosting this event in these very exciting times in our country. So the first quarter of 2025 indices did show a stabilization in terms of business confidence, and it showed consumer confidence at an all-time high, which was a little startling to some of us, but it is what it is. And the several initiatives taking place investment-wise, there is evidence, data to support the positive effects. So thank you for joining us again. Special welcome to those online on Zoom. Thanks again to our sponsor, GK Capital Management, our presenter from GK Capital Management, Mr. Tishan Lindo, Head of Business Development, and of course, welcome as usual to our presenter, Mr. Don Anderson, Executive Chairman, Market Research Services Limited. Also welcome to our esteemed panel, Mr. Mark Williams, Chief Executive Officer, Kingston Wharves, Mrs. Martha Miller, Chief Executive Officer, National Rums, Jamaica, and Mr. Sudu Ramani, Chief Executive Officer, Hardware and Lumber. Probably we're hoping and we're sure that they will add much color to the discussion on the indices results and, of course, on the trade issues currently facing the world. We will facilitate questions and comments via the chat room at the end of the presentations, and also during the panel discussion for the online persons through the Q&A. And you can either direct your questions to a specific panelist or generally. So we're happy to provide, they'll be happy to provide any clarity on any things that you know about. Special welcome, of course, to the past presidents of the Chamber, Mr. Lloyd Distant, Mr. Ian Nita, Mr. Larry Watson, Mr. Milton Samuda, and Michael McMorris. Also at that table, Director Janine Chen. Welcome also to the Vice Presidents, Jamie Ogilvie and Emil Leiber, also in the room. And thanks again to all our participants and sponsors. Thank you for being here. We're going to get right into it. We're keeping the schedule very tight today because we know a lot of persons here are otherwise committed today, so we need to move ahead. I'd like to welcome Tishan Lindo, Head of Business Development at GK Capital, who will bring the sponsors' remarks.
Thank you very much, Andre. Okay. Good morning, everyone. All protocols observed. I'd like to say a special thank you to all our invited guests. I see in the house we have guests from Student Loan, ICWI, Gallagher Insurance, and apologies if I've excluded everyone, but it is indeed an honor to have everyone here. To members of the Jamaica Chamber of Commerce, panelists, good morning. It is a pleasure to be here on behalf of GK Capital as we mark the second release of the JCC GK Capital Business and Consumer Confidence Indices. Our commitment to this initiative stems from a simple but powerful belief that information, when clear, current, and concise, has the ability to transform the way we plan, think, and act, especially in a time when international headwinds, the global trade wars, have directed implications on our bottom line, both in our businesses and in our households. Today's theme, global trade wars, a ripple effect on businesses and our wallet, speaks to that exactly. It reminds us that whatever happens in the world doesn't stay here. It affects how we source material, set prices, manage risk, and simultaneously how we spend, save, and invest. The purpose of this forum is not to share data, but to ignite meaningful conversation. We want today's insights to prompt thoughtful consideration. Considerations, I'm sorry, considerations on whether leading a company or managing a household budget, because every decision we make, from capital investments to everyday purchase, is influenced by confidence. Confidence in the market, confidence in the future, and in our ability to navigate the headwinds that lies ahead. At GK Capital, we are proud to support this initiative, not just as a sponsor, but as partners in building a more financially aware and forward-thinking Jamaica. We believe that with the right information, both businesses and individuals can make more informed and impactful decisions. So today, please observe the data and let's have some meaningful conversation. Thank you very much.
Thank you, Tishan. And again, we have to recognize our sponsors, GK Capital. Tishan, Head of Business Development at GK Capital. Thank you for making this all possible. Okay, right away, we will invite Executive Chairman Don Anderson, Market Research Services, to reveal to us the results of the second quarter 2025 Business and Consumer Confidence Indices. Please welcome Don.
Thank you very much, Andre. May I just say good morning to all distinguished panelists and everybody in the audience. I won't attempt to, of course, single out anybody because I would make some errors. And researchers don't like to make any errors, right? So here we are at the presentation of the second quarter Business and Consumer Survey Indices for 2025. I just want to spend a minute to give you a quick background to this particular study. It started in 2001, and my organization was fortunate to have been associated with this particular study from the outset. So if we fast forward, we now have completed close to 100 quarters of data. So can you imagine how much data we have available to you? The trending, of course, is a critically important factor. And we are here this morning looking at the second quarter for 2025. Tremendous information, I think, and we will share that in just a while. But give you a background to the actual study, which is important to contextualize everything. So as I indicated, we started in 2001, and we had the benefit of a gentleman by the name of Professor Richard Curtin from the University of Michigan. He was a world-leading figure in the generation of consumer and business indices, and I believe has been noted to have set up such indices in about 30 countries. In 9/11, I think he was on the cover of the Time magazine because he was called upon to do some studies which looked at how businesses and how consumers are responding to the challenges faced by the United States and the world at that time. So we come from that kind of background. Around about 2012, he pulled back. But we have always been involved in the collection of the data and assisting in the analysis of the data. But from 2012, we have been involved in not only the data collection, but in the analysis and now the presentation of the findings. Traditionally, we have interviewed over 600 households, consumers, one person per household, and over 100 businesses. And this is the basis on which we generate the data and are now about to report on the findings of the second quarter of 2025. We will deal first of all with the report on consumer confidence. We interviewed 625 persons in their households. And what have we found? If we look at the first line chart here, it says that consumer confidence grew by 1.4 percentage points between the first quarter of 2025 and now. We are virtually at the peak of consumer confidence in all of the 24 years that we've been doing this study, as you can see from 2001. And just in case, for persons who are seeing this chart for the first time, I don't think there are too many persons who are seeing this for the first time, you notice that there are three huge peaks going across this chart from 2001 all the way to 2025. There's a consistent factor here. And that consistent factor is that those are election years. And it is probably opportune and appropriate that I should say that what that meant, those peaks that you're seeing, represent election promises made and election promises unfulfilled. So it's a season for that. So I thought I'd just mention that. So in 2000 and 2007, for example, consumers responding to promises that were made, that consumer index went up significantly and dropped precipitously shortly afterwards when promises were not fulfilled. The same, to a lesser extent, was in 2011. But since then, consumer confidence has been more or less leveling off at a higher level, and we haven't seen that kind of dramatic upward movement and downward tick immediately afterwards. That says something, I guess, about the fact that the electorate has become a little bit more mature and are not responding willy-nilly to promises made by both parties in an election environment. Having contextualized that, we now begin to look at some of the data. So, hold in mind that consumer confidence increased by 1.4 percentage points, and we're now going to look at what are some of the factors that have driven this positive movement of 1.4 percentage point. One was that consumers feel that current business is better than it was in quarter one. Current business environment is better. And that is evidenced by the fact that the consumer confidence at this level was 2 percentage points more than it was in quarter one. So they feel that current business conditions are better, marginally so, than it was in quarter one. There's also a slight increase in expectations that business will continue to get better. So not only do we have a slight increase in what they saw, but they believe that it will continue on this path, however marginally so. What's interesting is that consumers are also beginning to believe that more jobs will become available. And before we jump over the moon with this, consumers have never ever felt that jobs were plentiful. And therefore, when you see a movement, we're talking about a movement from a relatively low percentage to maybe 2 percentage points, really marginal. We can look at the current job situation. In second quarter of 2024, 7.7% of the consumers indicated that they thought jobs were plentiful. In the first quarter of 2025, that moved to 11.7%, 12%. And in this particular quarter, 15% of the consumers believe that jobs are plentiful. But note, a lot of persons believe that jobs are in short supply, and the largest single item here were those persons who felt that it was just about adequate. So, despite the increase in employment, or conversely, the decrease in unemployment, consumers are never ever really comfortable with the level of jobs that are available to them. So current business conditions, they felt getting better. There are more jobs now available, but particularly from the job perspective, jobs have never been plentiful as far as the consumers are concerned. But any tick up really is something that is worth noting. Interestingly, let's look at the expected business conditions here. Let me back up a little bit. So that current business, current jobs. We're now going to look at what people expect. So again, we see a slight upward tick in how consumers feel about business. One is the environment, what about businesses now? So that was 29.5% in the second quarter of 2024. In the second quarter of 2025, it's 40.7%, a significant increase, but a continuation of the increase that we saw in the first quarter of 2025. Now, we just need to reflect a little bit that in the fourth quarter of 2024, we had a dramatic increase in business and consumer confidence, up some 13 percentage points. So that is what accounts for that 29.5% jumping up to 40% now. It really was driven by a significant increase in consumer confidence and business confidence in the fourth quarter of 2024. What it means is that that confidence level has been maintained. What about job situation? Again, very much like we indicated earlier, this is now what do you expect of the job situation going forward? And 39% said they expect it to get better, coming up from 35% in the first quarter of 2025, but significantly up from that 27.8% in the second quarter of 2024. So consumers are a little bit more buoyant overall, driven to a large extent by a dramatic increase in consumer confidence in the fourth quarter, which of course is Christmas period. All right? What it means is that that level of optimism has been maintained. Now, one would expect that with the positive and upward movement in consumer confidence, that this would impact how they see themselves and their capacity to spend. Well, let's look at household income first of all. 47.1% in the second quarter of 2024 said that they believe that their household income would grow. That has moved up to 58.9% in the first quarter of 2025, but it's down to 53.8% in the second quarter of 2025. So it's in a way kind of counterintuitive, because one would have expected, by virtue of what they believe to be an improvement in their own situation, jobs are going to become more plentiful to them, but only marginally so. And bear in mind constantly that they've never felt that jobs were plentiful, so that job plentiful quota is in the region of 15%. But despite the obvious kinds of positives which consumers are now exuding, they don't believe, in fact, the number of persons who believe that their household income will grow has fallen. And there are some other factors that will explain that shortly. So that this has an impact on their preparedness to invest. What do they plan to purchase? And we've consistently measured three variables: home purchases, vehicle purchases, and their preparedness to take vacations. So we see that there really has not been a significant increase in their purchase intent against the background of the anticipated improvement in their job situation, and they don't really think that their household income is going to be changed. As a matter of fact, fewer households believe their household income will increase. So this is almost counterintuitive, but there are factors that impact this particular apparent anomaly. When we look at this particular chart, it's also a fairly encouraging one against the background of the changes that have been taking place over the period. Now we look at quarter 1, 2025 and quarter 2, 2025. Do you expect conditions in the country, the economy, businesses to get better or worse? In the first quarter of 2025, 32.4% said we expect things to get better, as against 27.4% who said it would get worse. So there's a net positive here of about 4 percentage points. What's interesting is that when we look at the second quarter of 2025, the net positive is larger. So again, there is this kind of feeling that things are going to get better, that we expect things to get better, and despite that, the consumers are saying, well, we're not sure about expenditure on things that would make our life better. We're not sure about that. So what we have done is to plot who are the optimists and who are the pessimists on the second half of the chart here. And we can see that it's spread. Women, females, 41% of them believe that things are going to get better, as against 25% who say believe things are going to get worse. And we've done an analysis by age groups, by socioeconomic groups, and by area. And I should mention that for every single question and everything that we're reporting on here is analyzed by those variables, as is the custom in our market research practice. We don't do a study without having a reference in terms of who are the people, the demographics, gender, age, socioeconomic, and by area. Okay? So we can see at a glance what sector is more optimistic than the other. And we can look at the green chart, which talks in terms of those who believe things will get better, and we could see, I believe it's pretty clear on the board, that persons in other regions outside of Kingston and outside of tourist areas are the ones that are particularly optimistic about things moving forward. More rural area people, in other words. And in terms of the socioeconomic, there's no difference between those in the upper income, the middle income, and the lower income. They all believe, 36%, that things will get better. By age group, it's the older persons, 55 to 64, who 43% of them believe that things will get better, followed by the 35 to 44, who think that things will get better, 41% represented here, and the young persons, 39 to 18 to 24, who say 39% of them say things will get better. So that gives you a kind of dissection of who are the persons who are actually optimistic and who are the persons who are generally pessimistic. So here's one of the answers to the issue of what appears to be data which is maybe not consistent. Because whereas people think things are going to get better, they don't think their household income is going to get any better. In fact, they believe their household income will in fact decrease. When we look at prices compared to last year, 94% of all persons that we interviewed say that prices have gone up over the last year. And they believe that prices are going to continue to go up. So against what they see as possibly more job becoming available, they don't think that their disposable income is going to be improved any at all, because prices are going to undercut that. And this is significant. For all the studies that we have done over the last 4 years, when we look at this particular issue, people are concerned about the rising cost of living. So even if they believe they will get a job, it's going to be eroded by the significant increase in prices of all goods that they have to actually purchase. One of the questions that we throw at both consumers and businesses, well, here are a number of sectors that you have to relate to one way or another, or in front of you. Do you believe they will improve? In other words, things within these sectors will improve? What confidence do you have that they will improve? And it's interesting to note that 43% of the persons that we interviewed say that they expect the education sector to be the sector that improves more than any other, followed by the small business sector, which is highly represented in this study from the perspective of the consumers, and the power supply electricity system, 40%. Roadways, just 25% believe that there will be improvement in the roadways over the next year. Health services, 27%. So those are down the bottom of the rung. But the top three, as the data shows, education sector, small business sector, and the power supply. Now, we have found in a considerable number of studies that we have done that there's a significant increase in entrepreneurship. And the entrepreneurship has been largely small businesses at the moment. And there's no surprise, therefore, that 42% of the persons we interviewed say that the small business sector is a dynamic area and one which is likely to grow even more. We've seen a significant increase in entrepreneurship. Um, I think when we look at one of the charts on the preempting one of the charts on the business sector, businesses are saying we have a difficulty finding skilled labor. To a large extent, based on other studies we have done, we are finding that even in our industry, it is hard to get employment going because people are diverse and they're doing a number of things to make ends meet, having a number of hands in a number of different pots, so to speak. 3, 4 jobs, social media, etc. So we look at one or two charts that relate to the theme of our particular, the subject matter for this morning. Consumers, how aware are you of recent changes in the world trade agreements? And we're talking about the tariffs and all that thing that have been very much in the news. 49% of the consumers that we interviewed, and we're talking about persons from the low income, middle income, upper income, in relationship to their representation within the population, so the data is projectable. 49% of the respondents say we're aware. Whether they are intimately aware is another issue, but they certainly know that these are challenges that the world is facing, and they are aware that this is taking place. Only 17% said they're not, and 34% said they may be, which is now talking about the level of knowledge. But it's interesting to note that half the consumers that we interviewed said they are aware of the changes in the World Trade Agreements. So, what impact, in your view, will these trade agreements have or have been having on your spending? Very important factor. 38% say they're going to have to buy less. So that's going to impact their disposable income and their ability to purchase goods and services that feed into their daily household patterns of living. 32%, however, said it's not going to have an impact on my spending. Very interesting to note. But 28% say I'll be forced to buy more local products, which is obviously a positive. 18% will diversify their purchase situation, buying from different suppliers and stores. 16% say we'll have to delay major purchases of the shift around the money. And 15% say they will be changing their brand's purchase. So this is what they believe recent World Trade Agreements will have on their spending patterns. It will obviously affect a significant number of persons, and this data here talks to you in terms of how it will affect them in their daily kind of execution of their responsibilities. A very important chart, and again I need to give you the history of this chart because as I indicated from 2001 when we started until about 2010, 2011, we were getting some patterns of purchase intent that we couldn't understand. And tribute to the chamber, they said, we have to try to dig deep, try to disaggregate this, try to find out why, what was happening. And we included a number of questions on remittances. And it's like, it was a big eye-opener for us. Because we're now establishing that remittances, just in case we, again, maybe subjectively felt it was impacting how we responded and how we behaved, the data now confirms that remittances play a significant role in ensuring that people can meet their daily household expenditure. So the talk about what's likely to happen with remittances is very, very important from the perspective of the proposed tax, if you wish, on remittances. But what we have found is that over the years, and again that dip in remittance inflow by not quantum now, but in terms of number of households receiving remittances, is reflected by the COVID years. But it began to pick up back in 2023, and year to date, after 2 quarters, 31% of the households are now receiving remittances, coming back up to the peak of 36% in 2018. So 31%, and it's a pretty noticeable jump from 28% in 2024, that's the year accumulated, to 25 year to date, that's 31%, representing a 3% increase in the number of households that are receiving remittances. All right? It's a very important piece of data. And we, of course, have established by virtue of being able to analyze the data by various demographic units, we have established that a wide cross-section of households. It's not just limited to households in the low socioeconomic group, but households in the high and middle and high socioeconomic categories. We can see that 22% of households in the upper category receive remittances, as against, of course, 41% in the low category and 37% in the middle. And in the high, middle, and high, it's 22%. But it's right across the socioeconomic profile of the country, remittances are being received within households. All right? And we can see that the standout from an area, from a regional perspective or territory perspective, 42% in the tourist sector receiving remittances, as against 37% in other areas and 32% in Kingston. That gives you a profile of the households that are receiving remittances. And by age group, there's really very little difference. Very little difference. We can see right across it's between 34 and 38% according to age groups. We look at the frequency of receiving remittances because that's again is important. 34% of the households that we interviewed receive remittances once per month. This is up 1% on the first quarter. 7% receive every 2 months. 6% every 3 months. So when you accumulate that, we have just about close to 50% of the households that receive remittances at least once every 3 months. That's a good flow. As we can see, 6% receive funds when they're available from the senders. This is a difficult chart to read, so I'm going to go over it quickly, but it does reflect on the trend in the frequency of remittances. And it is saying that there's really not a lot of difference in terms of the frequency, the persons who receive remittances every 3 months, once every 3 months, or at least once every 3 months. There's really no difference represented by that top line. All right? So, we want to now move into the business sector, but just to summarize, the takeaway from the consumer segment is that consumers are a little bit more, the index is higher by 1.4%. Consumers are suggesting that things are going to get better, have gotten better, or going to get better from the perspective of the economy. But they don't think that this is going to affect their household income. And as a result, their purchase intent is really unchanged over the last period. And that is a worrying factor because it says that they're going to be impacted and by factors, by headwinds that they probably have no control over, price increases, and so on. Happily for the moment, remittances are up in terms of number of households, and that is going to cushion the ability of consumers to deal with their situation on a day-to-day basis. But it is a concern. It is of concern. So I hope the takeaway is not that consumers are more buoyant and they're very optimistic. Sure they are. But they're also saying that they're going to face headwinds that are going to challenge them in this particular period, next 3 months and next 6 months. They are going to be challenged by significant increases in prices, which they reflect upon, and they're not going to be able to buy and spend money on the things that they would like to spend money on. They're going to be forced to concentrate, as they have been, on meeting their daily household needs on a regular basis. So, what about business confidence? Business confidence is also up. Business confidence, and we look at this particular chart, we can see there was a dramatic fall off roundabout between 2023 2024 in business confidence. Picked up a little bit in the first quarter of 2025, and it's up again by 1.7 percentage points in 2025, second quarter. Right? So that's the trend, and as we indicate from 2001, and we can see that the business sector is less impacted by and less responsive to election promises. That chart doesn't have the kind of peaks that the consumer charts had. So that's a different kind of pattern, but we can see a continuous improvement in business confidence over the period. That 2021 to 2024 period obviously reflects again or represents that COVID downturn that we all felt. Okay. So we consistently plot the 5-year trend, even though we have the data as we have indicated. You can see we have the data from 2001. But again, for greater relevance, we have decided let's look at the last 5 years consistently. And we can see that, interestingly, business confidence was a peak of 139.7% over the last 5 years during a point of COVID. Because businesses kept on saying, we are resilient. We are going to bounce back. How quickly? We don't know. Maybe 3 years, maybe 5 years. But businesses were confident that they would bounce back from COVID. Well, in 2025 to date, business confidence is down on 2024. Again, one of the reasons is that in the fourth quarter of 2024, business confidence shot up significantly. Double digit improvement in business confidence in the last quarter of 2024. And that is what is now showing up current business confidence at a lower level, 4 percentage points down so far. But we note that that is really kind of consistent with the pattern of business confidence indices over the last 5 years. So that's the pattern, that's a 6-year trend, and at the moment, business confidence, despite the increase over the first quarter, in the second quarter of 1.7 percentage points, year to date, business confidence is lower than it was in 2024. We ask some of the same questions, of course, from a business perspective. We ask them about current profit. What do they expect? What's the kind of mood in the country now? Are you in a more positive, bullish environment or what? So these are the sorts of questions that we pose to the business sector. If we look, 17.9% second quarter 24 said their current profit was 17.9%, said it was better than expected. That fell in the first quarter of 2025 to 16.4% and picked up a little bit in the second quarter to 16.7%. Not a huge difference. All right? 67% in the second quarter of 2024 said that their current profit was as expected, fell to 57.2% in the first quarter and beginning to pick up again in the second quarter, 59.8%, who felt that their current profit was as expected. So what kind of environment are we now functioning as business persons? Is this a good time to invest or not? 50% in the second quarter of 2024 said that it was a good time to invest. But all of these numbers are down from the peak maybe 3-4 years ago, where over 65% of the businesses consistently made the point it was a good time to invest. So in the second quarter of 2024, with all that was happening, only 50%, we say only 50% against that 65 and 70% that we registered in the 3 years prior to then. When we look at the first quarter of 2025, 55% of all persons said, of all businesses said it was a good time to invest. And happily, that has moved up to 61% of the businesses that we interviewed. And I should have mentioned that we interviewed over 100 businesses right across the industry spectrum. We interviewed approximately 121 businesses in this particular survey, and that number floats up and down, but we aim to achieve a minimum of 100 businesses and a minimum of 600. But why that number varies is that we set into our fieldwork a 10% cushion. So we target 10% over and above. So we could get up to 660 and we could get up to 110. In this particular study, we interviewed 121 businesses. So 61% of all the businesses say it's a good time to invest. And that is pretty good information. But note, it's less than at the bullish peak of 65 and 70% recorded maybe 3 years ago. All right. So what about the firm's finances? And the question we ask is, do you expect your finances to improve, remain the same, or worsen? And the trend is pretty good again. In the second quarter of 2024, 62% of the businesses that we interviewed said they expected their finances to improve. That edged up to 63% in the first quarter of 2025 and moved up significantly to 71% in the second quarter under review. So 7 out of 10 businesses say they expect their finances to improve going forward. There's no time period necessarily, but going forward that they expect it to improve. But we know that because we do this on a quarterly basis, we're reflecting upon the next 3 to 6 months. So what about their profit situation? Against the background, you can see the kind of similarity between the business expectation and the consumer expectation. Because in terms of profits, will your profits improve? It kind of is pretty much flat. Because 60% said they expect their profits to improve quarter 2 2024, 61% in first quarter of 2025, and 62% in the second quarter of 2025. Not movement really. So again, they're pretty cautious about things going forward, despite the fact that they think it's a good environment to be investing. But again, they're saying, well, we need to be looking at our situation. Are we going to be that much more profitable? Do we expect greater profits? And there's a certain degree of conservatism in this regard. What about the economy? Not a great degree of positive movement. From the second quarter of 2024 to now, there's been a 4 percentage point increase in the number of businesses who think the economy is going to improve. So, question you might want to ask is, are they basing their positive thinking on something concrete? Or is it, as we have found in some studies that we have done in this particular environment, they're kind of optimistic without necessarily a concrete basis for that optimism. And some of that is in fact being reflected here. So, interestingly, we say, okay, what are your expectations going forward as far as the economy is concerned? And here we pin them down to 12 months. We say, over the next 12 months, do you expect the economy to get better or to get worse? And happily, we can see a positive, a net positive growing. Because in the first quarter of 2025, 40% of the businesses said, we expect the economy to improve, as against 16% who said we expect the economy to worsen. When we look at the second quarter of 2025, that positive rating, that better, moves up to 44%. There's a 4% increase, as against a 2% increase. So the net positive is better. So the businesses are in fact saying, yeah, we think the economy is going to get better, marginally 2% more, which probably is the same 2% that said, I have greater confidence now in what is happening. So again, we broke this down, as we indicated, by industry type, but also by industry size. And we note that there's really not a lot of difference. Where the greatest degree of positives was reflected was amongst the small business sector, employing 50 or less persons. 46% said we'd get better. But when you move up to the larger ones, that moved to 41%. Still a good percentage, but we can see that again there is something current running through that small business sector in terms of their intention to grow and the intention to and the expectations of the economy going forward. So we asked a similar question of the business sector. How do prices compare year to year? All right. And note that 94%, 93% of the consumers say they have experienced higher prices, and significantly so in the case of the consumers, much higher prices. The business sector is saying 94% we have experienced higher prices. 40%, however, say it increased significantly, but the larger single item was at 54% who said prices have increased moderately, but it cumulatively, it's nearly every business that we talk to say that their prices that they've had to actually work within or work from has increased. 5% it remained the same, and interestingly, that 1% decreased significantly. We'd love to know who those are. All right? Right. And that data has been broken down by small, less than 50, medium, and large. So you could take a look at that, and we can see that 73% of the large firms say that the prices that they have had to encounter in their business has increased moderately, as 23% say it has increased significantly. The medium-sized firms are the ones that are recording the highest level of increases. 53% said increase significantly. So we can look at it by sector and digest that. But this is the data in terms of prices compared to, say, last year, and which sectors actually are reflecting upon that. So, interestingly, we then say, looking forward, so that was what has taken place in terms of prices. 90% of the firms say they have experienced price increases of varying quantum. We then say, what about next year? Virtually the same 90% say we expect prices to increase. So we're in that environment where businesses are saying that they expect to face the headwinds in terms of increased prices next year. 1%, perhaps the same 1% that said, and we could have digested that and disaggregated that had it been an important number. But 1% say prices had fallen, and 1% say they expect it to fall next year. And again, if we had done a further disaggregation, if it was worth it, it's only 1%, we could have said exactly who those 1% are or what sector drove that. All right. So, what is the quantum of the increase that is expected? And we can see that the largest anticipated increase amongst those business firms that are employing between 50 and 100 employees, staff. 15.8%, amongst the small sectors, 13.9%, amongst the larger businesses, it's 11% for overall cumulative score. 14% is what people are expected the increases to be, which is, substantial in terms of operating a business. We expect it has gone up last year, you expect it to go up this year, coming year, and to the tune of 14 percentage points. That is significant. So, what do you think, we ask the businesses, what in your view are the things, or what from your perspective are the things that will drive these price increases? And they give us a range. That's not exhaustive. We have gone down to 1%. There are a number of factors that accounted for less than 1 percentage point, and we didn't plot them because relatively they're not as critically important. But 66% say we expect prices to go up because this has been the trend. This has been the trend. That again is something that we saw from the two previous charts. Prices went up significantly. We expect prices to go up by 14%. And we're saying, well, what are the drivers? And they said the trend is what is driving it. Okay? The trend is the greatest predictor of the outcome. That goes for elections as well. When we get a long time series of data, we can basically say how the data is going to look on election day. 48% say change in the cost of price of imports. Change in the exchange rate, 25%. Impending tariff to be imposed. And I should mention that these are totally spontaneous responses. We simply said, what is going to drive the price increase? And we recorded exactly what businesses said. So these are verbatim, top of mind responses from the business community. They add back obviously to more than 100% because some businesses gave more than one response. So we plot that. And we could derive what is the most important, but that alone tells you what are the most important factors driving their anticipated increases. Just to repeat, recent trends in prices. It's been going up, we expect it to go up even further. Change in the cost and price of imports, second. Change in the exchange rate, they're very concerned about that. But the impending tariffs, they're seeing that is going to be a factor, but only 17%. And perhaps it's because they're not quite clear as to how these tariffs are going to roll out in the immediate future. But that's an impact for sure. And then we have things like global issues will impact us negatively, lack of production, change in utility rates, what is being said and done by BOJ at 1%. Spontaneous responses from the business sector. So, a question that is a relatively recent addition. We used to plot, do you intend to invest more? Do you intend to spend more money developing your business? And we would get a yes, no. But we didn't always have the answer as to where and which sectors were likely to predominate in this capital expenditure. So here we have this from about 2023, and we can see right across the spectrum here. For the year to date, 2025, the sector that stands out is the farming and agriculture sector, including mining and quarrying. 78% of them said that they intend to increase their capital outlay, capital investment. And then we look at 58% manufacturing, 56% tourism and hospitality, transport, storage, and communication, and 55% tourism and hospitality. So this, again, is something for the client, for example, the sponsor of this particular event, because they're saying, here's where the capital investment will come from. And therefore, you can take a look at all these and you can target your marketing clearly to those sectors that are planning to inject more capital in their business. This is the value of this particular chart. But we also said, because we want to know, once you know the problem, you're halfway towards the solution. That's the philosophy. And therefore, we attempted to get from businesses, what are the things impacting your decision to undertake business expansion? What are the inhibiting factors? Therefore, and again, totally spontaneous. We gave nobody any answer or never fed them any answer. There was no preconceived sheet or nothing. We simply said, what are the factors impacting your ability to expand? They gave us their responses. These were all coded subsequently, and that's the result of that particular question. So 19% of the businesses that we interviewed said a shortage of qualified skilled labor. Very important. It's been a subject, it's a subject matter over the last 2-3 years. People having difficulty finding the kinds of quality that we need or the kinds of staff that we need to fit into our businesses. And this is what this is saying, 19%. 15% said lack of funding, access to finance. Right? 15% said the cost of foreign exchange. 15% said high input costs. Low consumer spending. So people are saying consumers are having difficulty buying our goods. 9% lack of revenue or cash flow, 10%. So it goes down the line down to 2% lack of marketing. So there's a recognition that there's work to be done from internal. But they cite a number of factors that are impacting their ability to expand. And these are factors that I'm sure GK Capital Markets people are looking at very closely. Right? Again, this is a question that we ask of the business sector. When we did feed them here the sectors that we wanted them to look at: police, power, water supply, government, etc. And we then asked them, all right, what degree of confidence, or do you feel confident that these are sectors that will grow in the next year? It's interesting to note, against the background of what has been happening in terms of reduction in crime, that the police, 41%, as far as the business sector is concerned, 41% say they are confident that this is where improvement will take place. 30% said in the power supply, 29% said in the water supply, and 22%. So we can see the numbers going down. 22% government of Jamaica, 22% roadways, 21% small business. Small business sector comes up every time. Public transport, 19%. Education sector, 19%. Remember, that was the top as far as the consumers are concerned. And 15% health services. So these are, and we can see the degree to which that has changed over the last quarter. We're coming to the end. We have probably just one more chart to show you. And it says, what is your current capacity that you're operating at? 74% of the medium-sized firms say we're operating at 74%, as against 72% in large firms and 65% in smaller firms. Not surprising. For an overall impact, that 68% of the businesses that we interviewed, businesses are operating at 68% overall. Overall, businesses are operating at 68% capacity improvement, therefore. All right? What about the recent changes? 79% said, yes, we are aware of the recent changes. which is the largest single. So that's 8 out of every 10 businesses that we interviewed. I'd like to know who those 11% are, but that's another matter. And what's the impact? 51% said it's going to impact their shipping and logistics cost, 43% increase in inventory, 36% increase in cost, 25% increase in prices charged to consumers. So businesses are consumed about consumer ability to buy, obviously, because that's where they make the money. 23% says it's going to impact their profitability, and so on. So decline in demand, no impact as far as they are concerned, change suppliers to different countries, increase in demand for their products, and increase in profits. So we are at the end of, I am at the end of my particular presentation, and I'll now hand over back to Andre for the next
Thank you,
segment.
Don. Before you move, Don, thank you very much. Rich information as usual. One question for you. I mean, I think historically you said 3 quarters in a row constitutes a trend. We have 2 quarters in a row now of high and increasing consumer confidence. Is that still accurate that we can expect, if we see another quarter like this, that you can predictably say this is a trend?
I think we're on a trend right now, but again, you have to bear in mind the headwinds that they say they're going to face. And I think that is probably going to impact the ability or the level of the increase. But the level of increase is really just 1 percentage point. And I think we need to be very careful that we don't go overboard with that, because it's really a marginal increase.
Right.
All right. And if we saw, for example, a 4% increase and a 7% increase, I would say yes.
But
the
no.
trend is actually in the right direction, and positively so.
Right. And then the first slide you showed us, the trend in consumer confidence, shows significant dips post-election over the 20 how much years.
Yes.
So if that doesn't happen next quarter, anything other than that would be a surprise.
It would be a surprise.
All right, say no more. Thank you very much, Don Anderson. Give him a round of applause, ladies and gentlemen. All right, so, lady and gentlemen of the panel, the headline at 6 o'clock will be consumer confidence at an all-time high, business confidence remains stable. From your perspective, in your individual businesses, is this congruent to what you see happening in your business? I'll start with the lady, Martha Miller, who is CEO of National Rums and also a vice president of the chamber.
All right, thanks, Andre. Yes, Harry. Good morning, everyone. So it's difficult to say from our perspective because we're impacted so much by everything that's happening in the economy. To really pull out exactly what's happening with trade at this point and the impact on our economy. We're looking at most of our sales are via export. So, and a very small percentage of our exports are going into the US, right? So a lot of this trade conversation is not really impacting us at this time. But we are impacted by everything else. We're impacted by what's happening in spirits in world with regards to post-COVID, where spirits world is down 20% without the trade issues. But we're also impacted by conservative behavior of our customers not knowing what is happening, right? Whether it be because of the Ukraine or what's happening in Gaza or the blip from Iran, and I hope it's a blip from Iran. But various things, uncertainty of what is happening in the proclamations, as I like to say, by the President of the US. So there is a bout of conservatism that's happening in addition to the fact that we are impacted by post-COVID reality of COVID is now over, so we are no longer spending much time at home. So drinking is down. So we're not quite sure. We're kind of conservative and waiting to see.
So you wouldn't say then that consumer confidence is high from your perspective?
No, I wouldn't say that it's high from our perspective.
Okay.
No.
But business is still confident, conservatively confident?
Business is down and stable. Not
Stable.
declining, but we've hit a low and we hope Over the next 12 months in particular, I don't expect a bounce back.
Okay.
But we're hoping in the next 24 months to start to see
Okay.
some kind of bounce back.
Thank you very much. Sudu Ramani, CEO Hardware and Lumber, same question. The results from the survey show heightened consumer confidence, stable business confidence. Is that what your consumers are? As a fast-moving consumer goods guy, what are you seeing?
Yeah, good morning all. At Hardware and Lumber, our business is pretty diverse in the sense we have a very large retail. We also have a pretty significant agro business, and we also do wholesale of commodities, lumber, steel, cement. What we have noticed, particularly in the retail market, is that it's been pretty flat, and the buying trends have moved more towards non-discretionary, and the discretionary spending, we do see it softening a bit. I think where the business confidence comes for us, and we are confident, and where the business confidence comes is not so much in the challenges they face, but how better prepared we are for the challenges that are coming. Because I think businesses have, over the last few years, invested a lot in their capacity to meet challenges in terms of managing their talent, managing their resources, managing their inventory. We are buying better. We are leaner in how we manage our resources and more effective and efficient. So it is not so much the business outlook as our preparedness for the headwinds that are coming our way, or we believe we are prepared for what's coming our way, that gives us a level of confidence. Income has been fairly flat, but I think, like Martha said, it's not declining, it's stable. Okay. And so any improvement is good, but we're not seeing a situation, we're not seeing a crisis or a panic situation now, and we're fairly confident we can face what's coming our way.
Thank you. Mark Williams, CEO, Kingston Wharves, same question. The results that we just heard, are you seeing those in your business?
Morning all. The answer is yes. I think businesses generally are just simply resilient. And I think more and more businesses in Jamaica and the Caribbean beginning to expand their reach. So the focus is no longer only in Jamaica. And while you may have a perspective around the economy in Jamaica, because businesses are looking to expand, there are more opportunities. And therefore in shipping, for example, with all these issues of tariffs and wars, the Caribbean has been the beneficiary of that. Certainly Jamaica, Kingston Wharves, Kingston Container Terminal. I think both entities have announced good results. Last week, KFTL, along with the Port Authority of Jamaica, they have announced an expansion of their business. Where you just hold containers. KW, to be specific, what we're seeing certainly in our transshipment business is upwards of 30% increase. We move cars, for example, to 45 different countries, to Australia, to New Zealand. We typically do maybe 2 or 3 car ships per week. Last week we had 6. So I think generally businesses are pivoting, that's what we learned from COVID, to not only focus on the local economy, but the wider Caribbean, Latin America. And I think based on that, cautiously optimistic view of businesses is that things will get better.
Okay, thank you very much. Martha, you mentioned something when we were at breakfast about, and we saw it come out in the results that showed significant expectation for significant increase in costs, both from the consumers and from the businesses. What mitigating strategies would your business be employing to sort of lessen the blow on the consumer in terms of the expected increase in operating and costs?
All right, so I think what we're talking about is the expected price increases that we would be faced with by the tariffs. So what has been happening to us is that our shipments that we would have sent out in April and in May, we would have been forced to absorb some of those increases. Now we are relooking at it again to ascertain, do we really need to, because we're not quite sure what's going on with the businesses. We have in the interim though had to tighten our belt within the business. We've had to become very lean so that we can respond to whatever is coming at us. We have the headwinds, and we're just in general looking at very heavily focused on our procurement, not taking anything for granted. Everything, you're a long-standing customer or a long-standing supplier, we're not taking that for granted anymore. Everything is, we're looking at all our costs from top down. We're looking at all our costs and just trying to make the business more lean.
Okay. Thank you. Sudu, same question. But from your perspective, when you have suppliers, a three-way chain of suppliers, would it be a situation where you look at all, sit together and say, look here, if this thing is going up 9%, can we split it three ways in order to lower the effect on the final cost to the consumer? Is that something, is that a strategy that could be employed or can be employed?
It's not a very popular strategy to our suppliers. But that said, what we have seen, and it's interesting, so what I call the big three, we have about 30,000 SKUs from about 300 vendors from about 30 countries. So we are fairly diversified in our buying. But what we've seen from some of our US vendors, some of our large US vendors, who do not have a bonded warehouse in Miami, many of them who used to ship to us directly, factory direct or from their warehouse, have now actually moved to bonded warehouses in Panama and Mexico, and they're bringing the shipments there and they're shipping it to us. So the US suppliers too are looking at mitigating strategies for things that they bring in and they supply us and so many others in our sector, in the retail and consumer goods sector. So mitigating strategies are in place. We do have multiple vendors for similar products so that we have options on where to bring it from. Over the last 2 years, we have diversified significantly into the Latin America, Caribbean region. So quite a lot of what we buy comes from those areas. And therefore, in our case, I think the buying has been fairly well managed. And so while cost increases will happen, for example, I was saying now US is sucking in containers to try and beat the end of July deadline. And so shipping costs have gone up dramatically. So we mitigate that by, for example, if you get a factory direct sanitary ware supplier from China, we're now no longer doing factory direct, but we're consolidating it, where we add a lot of smaller goods that can fill in the space in the container so that the cost of shipping is now distributed over more SKUs, and therefore we can kind of maintain the cost per unit of shipping. So these kind of strategies are, it's a constant monitoring and implementing things based upon, you kind of have to think on the fly and move.
Okay. Thank you. Same question, Mark. I mean, you are faced in trying to find ways to mitigate rising shipping costs and supply delays, which certainly affects those of us who can't carry inventory or simply have a made-to-order kind of business, just in time. What is happening on the end of the shipping, managing the rising shipping costs and supply delays?
So let me just quickly give a perspective of increasing cost. What's happening right now in the Red Sea and wars and forcing ships to go to another route, Cape Verde, you're adding 10 to 14 days time. That's $1 million per ship. So that alone will cause an increase in cost. What are we doing? Optimizing efficiency, improving infrastructure, and using technology. Basically, what does that mean? It means, therefore, that once a ship gets to Kingston Wharves, our number one priority is to get it in and get it out. Delays add cost. It means, therefore, we're investing in our infrastructure. Last year, we refurbished a berth, US $30 million. We have added equipment state-of-the-art equipment, so improve our efficiency. We're using technology to drive the business. So again, it's all about efficiency, and that will reduce cost, and by extension, cost for our customers and business partners.
Okay. So the direct impact now of these proposed tariffs, many of them seem to be proposed and then they go away. In the United States particularly are threatening and then they back off. So is it that we're making no decisions right now, or what is the mitigating strategy in case these actual tariffs come to bear? We can't, because of how seesaw it seems to be, we can't make any long-term decisions. What do we do in the short term? Just try to find other markets? I don't know, Sudu, if you want to try that one.
Interestingly enough, Andre, what has happened is that every time we perceive a challenge and we react to that, when the challenge dies, the actions taken as a result of the perceptions actually work for us. Okay. So it is a constant correction mode, but it's a correction for the better. So, for example, when we diversify our supply chain in anticipation of a problem, when the problem doesn't happen, the supply chain doesn't go away because we've already diversified now. So, from that perspective, I would say that notwithstanding what we anticipate and how we prepare for it, I think it only makes the organization stronger, because the spotlight is now on things that the last 5 years they may not have considered. Right. So we are forced to reinvent ourselves, and I think that's not a bad thing.
Yeah, I think COVID was the lesson there.
Yeah.
But so Martha, the knee-jerk reactions to this, to what is being proposed in the United States particularly, is not really there. I mean, or UK for that matter. You're doing the same sort of thing where whatever the mitigant strategies are that you have in mind, if these things happen, are those that you're sticking to in the short term.
Exactly. So it's not about, so there's activity going on, but you try to focus on your core business, what is right for the business, and what is a long-term strategy to respond to an activity, not just a knee-jerk reaction. And as we have been saying, it does respond in long-term benefit to the business. Yeah.
Okay, Mark, is that?
I would say two things. One, I think we need to advocate for the changes that we want. 2 months ago, the private sector organization in the Caribbean got online, over 500 persons, have some discussion about this issue of tariff being imposed on vessels calling port in the Caribbean. We got changing that. The other thing is to look for alternate supply. China's announced zero tariff for 50 or 53 African nations. You know, don't just sit back, advocate, look for new supply chains, and just continue to be very optimistic about running your business. We can't change what President Trump or whomever have in mind. Plan your business around it.
Right. So the option of identifying new markets, in the case of the one you mentioned a while ago, the zero tariffs is a good thing, but it'll take a longer time for the goods to get here. You're all in different sort of products and services, but in Sudu's case, is there opportunity? I mean, John Mahfood, former president of the manufacturers, always spoke about it during COVID, the challenges of getting to UK and beyond with your goods. So what about regional Latin America, Central, South America? Are those price points worth looking at in terms of new suppliers?
There is opportunity in this because a lot of the Latin American countries are also exporting to the US. So just as we are looking for diverse suppliers, they are looking for diverse markets. So we have found a lot of buy-in from many of the Latin American suppliers who are extending themselves to try and be competitive in our market. Because like I say, they face the same challenges as we do. We're just on two different sides of the fence. So there are opportunities in this as well in their seeking customers.
Okay. So, Tishan, where as the financier now, what is your role in this now? How are you going to manage the expectations of your several clients who are in needs of some sort of financial support in this uncertain situation?
Okay, Andre. It's pretty simple. What we do at GK Capital is that we.
Mike, volume on the mic. Go ahead, go ahead.
Sorry, yeah. What we do at GK Capital is that we take a guided approach to how we go about doing things. What we do is that we allow the data or the research to guide us. Investing is not a 1 day, 2 day, or 90-day thing. Usually it's a long-term thing. So basically what we do is that we look for the opportunities in all of this, and we guide our clients accordingly. As I said, we use the research. Usually if we're looking at the equities market or we're researching in equities, unfortunately in Jamaica we have been skewed to the fact that we look for short-term growth. But really and truly, it should be a long-term objective. So basically we try to have the conversation with the clients. We try to guide them accordingly, and we put them in mostly blue chips or ETFs or investment vehicles that will give them long-term value instead of looking for short-term objectives. And then on the other side, in terms of from the business perspective, we have our investment banking unit, which basically we will use to do the hand-holding for our business community in terms of affording them the financing that they require to expand the business or to cushion the business during these critical times. So basically, we have a tool chest that we can use to guide whether it's the retail or the wealth investors to get to the goal that they want, and for the business investors who are looking financing or guidance throughout this critical time, the investment banking team is there to provide a solution to get them the capital that they need to take them over.
Yeah, despite what is happening though, there needs to be some amount of flexibility, because let's say you call Mark, or Mark calls you today and he needs a 2-year facility at competitive terms, and something happens in North America, UK, and Mark come back to you and say, boy, you have to go renegotiate this thing here now. Is there any flexibility in that regard? And given the global uncertainties again, how does the financier, the GK Capital particularly, reinvent itself to create products and create services that can remain flexible so that the customers who are in a changing market also can thrive?
Thanks for that, Andre. But GK Capital is also a small part of the larger GK group, which has been in existence for over 102 years. I think flexibility is the name of our game. I alluded to our investment banking team, and I alluded to the hand-holding. A part of the hand-holding is to sit with the client and know exactly what the client wants. It is a change in financial landscape. And basically what we try to do is that we try to meet the needs of the client. So if we need to make adjustments or tweaks on the road to get to the financial solution that the clients need, we are there for them. We'll sit with them. We have a good research team. We have the data to back it. And usually if the company is a strong company and we have a good story, investors will gravitate towards what we're trying to do. I think everybody is aware from the study coming out. I think businesses over 90% knows what is happening. On the consumer side, it's the same thing. So basically, it's about telling the story. It's about holding the clients and walking the journey with the client and giving them a financial solution that is palatable for them, that they can afford, and that can help them throughout.
Thank you. Martha, the various export regulations across the territories and the partner country policies and politics. What happens? How do you navigate and stay straight in that currently changing environment?
One good thing for me, as I said, we have very little business in the United States, and there's not much volatility in the others. I don't know what will happen if the UK election and we have another reversal of Brexit. But right now, we don't see any challenges where that's concerned in the near short term. So we're pretty stable where that's concerned. As I said, in the US, we are just, it's a smaller part of our business. For rum overall, it's in the mid-20s of Jamaica's total rum production that goes into the United States. So it's a matter of us, it's negotiation. It's holding hard for the long term, some squeezing of margins, and remaining flexible. Working with your partners through the three-tier system, just to navigate it, but really trying to hold steam, try to be as steady as possible, and really some amount of squeezing of margins as we go, as we ride, as we face the headwinds and take the battles as they come.
Okay. The labor question came up in the survey. Comes up over and over again. The businesses are still sort of at their wits' end in some degrees in terms of identifying qualified and suitable labor. Sudu, is that a challenge of yours, and what is being done to really mitigate? I've heard of situations where, in other businesses, where foreign labor is recruited and it takes forever to get a work permit sometimes. In terms of the labor issue, how is things at Hardware Number, and how do you maintain the balance?
I've been here 26 years, and I didn't have a problem with the work permit or my permanent residency. So in my own case, I can say it worked. But that said, for us, the labor pool is not so much at the high end as the low end in retail, which is where the bulk of our staffing is. And at the retail level, the attrition rate is really high. When you have call centers and all these people sucking people in at salaries more than what we can afford, it's a constant push to try and retain talent at that level. And customer experience suffers when you're not able to retain the right talent at the store level, which is where a lot of our focus is on now. So we have subsequently increased our level of engagement at that level. Performance-based incentives have gone up significantly, which gives them an option to be able to earn a lot. So talent acquisition is not a problem at that level. Talent retention is a problem at that level, retention, because the attrition rate is very high. But that is really where our Hardware and Lumber's labor challenges. It's really at that level. It's not so much at the technical or the high-level requirement of talent.
Yeah. So I want to add to what Suku was saying. In terms of, for us, it is skilled tradesmen as well as skilled labor. Because if we look at, for example, a TIG welder, you can't keep one in house. You train them, short order, they're going to, because they're so high, in such high demand. You're going to train them, and retention of talent at that level for me is an issue. Then at the other end, where I didn't realize until I actually got into the position how much skilled or requirements for engineers and chemists the rum business is all about. And it is difficult to find engineers, it's difficult to find chemists, particularly when you're not in Kingston.
Okay.
Right? The challenge that you face when you operate outside of Kingston or outside of the Montego Bay, the city of Montego Bay, is significant.
Okay.
Yeah.
Same thing, Mark. This is your time of year.
Similar for us, as you would expect, having very technical
Yes.
equipment requires competence and skill set at a particular level. What we do is to invest heavily in training. We work with the local institution, Caribbean Maritime University, HART, NTA.
Okay.
The challenge is to retain them. So we would ask the original equipment manufacturers, they would send their technical people to train them. Once they get certification, then they're off to Canada. So that's the issue. And I'll just give you one quick story. We sent Two of our guys to the US for training. It was a group of 25 persons across the world. 3 persons were certified, 2 from KW, 1 from somewhere in Latin America. They offered them job
Right there.
before they returned.
Wow.
So that's the issue about retention. So again, it's for HR to ensure that we have a very robust retention policy.
Right.
So yeah, that's it.
Or only the local training. All right, it's that time of year where our retailers especially are starting to consider funding their Christmas purchases for consumers. Based on the operations at the wharf now, what is the realistic timeline if you want your goods here by the middle of November or by November 1? Is it now too late to order? And that after you answer that, Tishan will tell me what facilities can actually be put in place from now so that should there be any other tariff or related issues that we can tide over the customers until January when they should have better cash flow. You first, Mark.
So it's not too late.
Not too late yet.
Not too late. There's still time. We just opened a 110,000 square feet facility, warehouse facility, to move cargo through that facility. We're about to, in another 2 months, to refurbish another 60,000 square feet of dedicated space for commercial business. So once you're commercial, full load containers, you'll have a dedicated space, fully focused on that. As I said, we just got an additional 3 reach stackers. That's the equipment that's used to move your containers around. We're about to get a new crane that should be delivered in September. So we're building out our infrastructure, we're adding equipment, we're training our staff, we're improving our technology so that we can, facilitate increased productivity to get your containers as quickly as possible.
Great. So there's a plan then. I mean, looking into you're all at a senior level here. Strategically, what are we anticipating? This is now the height of election season. What happens in your business to do at this time, and what do you anticipate the rest of this year into first quarter of 2025 will happen in your business?
We do expect a good third and fourth quarter. The trends in our business are looking that way. I'm very glad to hear what Mark said because most of our Christmas orders are in already. If I'd known all that, I would have probably delayed it a bit.
Gotta get some cheaper money to borrow from Tisha.
Oh, yes. But most of our Christmas orders are in, and we're doing a lot of strategic thinking around our store placements and the messaging. Because in our case in particular, with 10 rapid true value stores, anything you buy is times 10 if you want to stock all the stores. So we're kind of positioning different stores differently for Christmas and Black Friday. So Lane will be positioned differently from Crossroads, so to speak. Okay. So we're undertaking those strategies so that the amount of cash we have tied up in inventory is not as high as routinely we would have tied up and just brought in goods for all the 10 stores. So I anticipate a good fourth quarter for sure and a decent third quarter.
Okay, Martha, same question. Any headwinds you see happening and what you expect to where you expect to be by January 2026?
That's one that we're working through. Still a lot of uncertainty. In the local market, we do see, which is a smaller segment of my business, we do see some upward trends. So we are optimistic about what the Christmas season looks like. 2026, we're cautiously optimistic for improved business. With regards to election, however, it's not necessarily a happy time for the rum business.
I thought it would be.
I know. It's a time of, they need rum while they're on the campaign trail.
For free.
So it's not, my inbox is not so happy at that time with requests. He's not so happy at that type of request. Apart from that, at joke aside, that doesn't really impact my business that much.
Okay. Okay. Mark?
I think the good news for Jamaica is that we have a very stable democracy. Regardless of which of the P's get back in or out of power, I think that will remain, economic policies, thank God for EPOC, I think will continue to exist. And therefore, we're not overly concerned about the effects of an election. And therefore, we're very optimistic. We've ended a good, second quarter without giving away stock exchange information before. We're very focused and bullish about what's happening. Hopefully today you'll hear some development on the news, having declared to the stock exchange some acquisition. Very optimistic.
Okay.
Very optimistic.
Okay. Tishan, your view for the economy?
Well, in all honesty, I echo the same sentiments as Mark. We usually have political continuity, whichever party is in power. With that said, the investment plan would basically remain the same. We have the vehicles for the retail. We have GK mutual funds. For our wealth clients, we have our discretionary portfolio management services, which would be used to guide the investments. On the business side or on the borrowing side, we have our investment banking arm, which will basically hold the business's hand in terms of from the financing standpoint, and also from a Grace Kennedy standpoint, being a part of the Grace Kennedy group, we also partner with First Global Bank, who is basically our sister company in terms of commercial banking. So back to the question you asked about funding for the Christmas season, we have the investment arm, which would give the financing. However, it might be a short-term need, so it might be what we'd have to do is leverage the bank in terms of giving a bridge financing until we take the time to structure probably a bond or something for the longer term to help the business community to acquire the capital that they require. So basically, as I said, we have the toolkit at GK Capital to meet almost any need. Once it's on any need, if it's on the retail side for investments, the wealth side, or a business who is looking funding, we're open, we're available, and we have the skill set to do it.
All right, thank you. The final question for the panel would, given what we have seen in crime statistics and some improvements in the crime statistics, in your areas of business, have you seen any improvement in that area? Sudu first, in terms of, because I know you were quite vulnerable sometime. How are things now from the managing the business through the ravages of types of crime, given that we're reporting 40% decreases in several types of crime?
Crime is not really an issue for us based on where we are located and how we operate. One of the things that plagues our sector is pilferage, which is where a lot of technology in terms of...
That's crime though.
Yeah, so crime in the sense of, decline in crime on the streets, that is not so much an impact. So we've invested heavily in AI cameras that can recognize activities and motions and things like that. So we're depending a lot more on technology than the security at the door. But outside of that, we're not really very impacted with the crime climate on the streets, crime as we know it.
Okay, Martha, any effect of have you seen any effect of the reduction in the numbers in your business?
Well, it doesn't directly, like Sue, I don't have a direct impact on the crime statistics that we're talking about, murders, etc. But I have liquid gold. So as you said, significant increase in investment in electronic security is where we need to focus on. Illicit alcohol is a challenge. So the man at the door has become increasingly unaffordable. So the focus has been on AI and what electronic security can do. So that's where our focus is.
Okay. Mark, I'm assuming your answer would not be dissimilar.
Well, we applaud the achievements of the police. What's important for us, Jamaica's strategic position to movement of cargo also has a strategic position for the movement of contraband. And if you ask me what keeps me up at night, that's it. But if you look over the past 6 months, the efforts of the police, Jamaica Customs, the Port Authority, having a completely upgraded security infrastructure with scanners, you would have seen the number of guns the Jamaica Customs have been finding because of the new scanners, the new security system. So for us, it caused me to sleep a little better at night. And for us, given our global reach, it's important to have confidence in a port when you're transshipping your cargo. So for us, that's the important part.
Thank you very much. Any questions from the audience? I'll take 2 questions from the audience if there are any. I see 2 over here.
Good morning. Nielsen Rose, Caribbean Business Exchange. I picked up from the survey, from the reports, 2 very important features which seem to link back to the international space. So remittances are one, and then we went over to the labor situation where we're losing skilled labor again to the international space, which brings us back really to, are we able to compete given the salaries that we pay locally? When we're looking at minimum wage in New York, for instance, think about $15 per hour. We might be running at $15 per day. Can we really compete? And is this something that as businesses we need to, and as a country, we need to begin to look at? How do we grow the economy, grow businesses, so that we can compete in a better way? And it shows in, even though there's better expectations of businesses and consumer confidence, it shows in the fact that we really don't think either businesses or consumers will be able to buy more, which comes right back to, can we compete at these pay levels?
Whose question? Whose question? Whose question?
Well, anybody on the panel can take it.
I think it's more than just a price point, salary. That's just one. When people migrate, it's never only about the salary. It's about health, education for the children, peace of mind, etc. So it's a fully integrated ecosystem. Businesses, our job is to pay a competitive salary, and we'll do that, and we'll train, and we'll try to retain. But it's much more than that. It's a conversation for the country.
So I agree with what Mark said 100%. So because Diageo is my largest customer, I have a lot of first world standards that we have to meet. So one of them is sustainability with regards to human rights. And there is a living wage that they require us to pay, a minimum living wage of like $140,000 a month, something like that. So every year I get my audit, and I said that's a bigger question for the country. But where we are able to, we're doing a good job of paying attention to the minimum wage and getting out of the cycle where the minimum wage is set for, I don't know, several years on end. And every year you're looking at it, making movement on that. But like Mark said, it's about what keeps an employee happy is more than the dollar value that they're paid. So you have to pay attention. As employees, we have to pay attention to other things other than the dollar value. Right? The conditions that they're working in, the opportunities for growth, the training that they're getting. Do they have a future? Do they see a future in where they are? Do they see so for me, if somebody resigns, it's never a negative thing. It's a great opportunity for them to go on to a new opportunity, and it's an opportunity for somebody else to come in and learn something else. So are we preparing them for a bigger future? And I think that's all we can do. Right? We can't try to compete with the U.S. minimum wage. Right? We won't survive. Focus on the bigger picture, as Mark said. Focus on the bigger picture.
All right, thank you. We do have some video clips of some short interviews with some businesses, which we'll show shortly. But to do anything to add to that, to answer that question?
No, I agree 100% with Mark and what Martha added, in the sense that our competition is not an international competition. We're not looking at minimum wages outside of Jamaica. Our competition is within Jamaica because, you know, we have call centers and other people. But let me tell you, we've had situations where people have left us to go to a call center, and after a couple of months, they've called us back to say, can they reapply for a position? So, you know, HR is critical in maintaining that level of engagement and providing that right environment where a person feels comfortable. And it's a lot that goes into that feels comfortable outside of just the price point.
Thank you. Final question.
Right. Hi, Stephen Jackson from the Gleaner. I noticed that you have an importer, an exporter, and of course a wharf. Maybe Mark should have been in the middle, but but really, it sounds as if the consensus is that businesses should either reduce or avoid investment in America at this time. Is that fair?
Absolutely not. Absolutely not. U.S. will always be important to the Caribbean. Tariffs or no tariff. I think what we're saying is that look for alternatives. Advocate for changes. As I said, it's no mean feat what the Caribbean private sector did, making representation to their respective government, to the embassies in their region. It's no mean feat. We were looking at US $1 million per call, and that's waived. US will always be important.
I'm sure you speak on behalf of all the panelists about not wanting to avoid the US.
Yeah.
Yes, Larry. Larry Watson, CEO of the Chamber.
Thank you. This one is directed at Mark. Can you tell us what is your strategic intent why you have acquired 27% of cargo handlers?
I assume it's public knowledge now.
Well, I'm assuming it's now, we're reported to the stock exchange. You know, first of all, you know, I just want to pay, you know, tribute to Mark Hart and the team at Cargo Handlers in Montego Bay. They've done an exceptionally good job. What we want to do is to see how we can work with the team. This is not a takeover by any means. We just see an opportunity in probably one of the fastest growing area in Jamaica, Montego Bay. And, you know, we want to see how we can work best with Mark to lend our support, our expertise, competence in a particular area, and build synergies. That's as much as I'll say now, Larry.
All right.
Thank you.
Thank you for that. Okay, over to the technical team to just show us that video clip. We had an interview with some of the business people on their take on what is happening globally. Very quickly.
Have not seen any
Volume.
impact yet. Have seen some increases in pricing on raw materials, but nothing that I would say is a direct impact of the trade war. So I think that is yet to be determined. I think supply chain is yet to
Put the volume a little bit.
be determined as well, and what effect that has, whether it puts vessels out of place to meet the realigned the flow of products. I don't think we've seen anything that can really speak with any clarity to what that impact is going to be. My business, we import primarily raw materials out of the US, out of the Gulf Coast, and from Europe as well. And we haven't seen anything that we can directly attribute to the trade wars as an impact on our supply chain or our cost of our raw materials, but that's probably going to be product specific. Even the items we do import a few items out of Asia, and we haven't seen a significant change in those prices nor the supply chain on that side.
So global trade wars, it really influences the supply and demand, and when it comes to supply chains, it is at a big effect in terms of the availability of goods and availability of shipping lines coming down to our territory. So when there is a trade war between one of the largest territories like the US and China, then it's going to affect the demand of availability of shipping lines, availability of goods, and then in fact that then affects the price of these goods. So without a doubt, the global trade wars, it has a big influence on operating costs as well as the availability of goods into our territory.
I think the biggest ripple effect is really the uncertainty. I think people are pausing a little bit with regard to expansion, investment, acquisition, because there is still some uncertainty in how the changes and realignment are going to really evidence themselves in markets, and it's going to be, I believe it's going to be specific to the industries. We're not going to have one overriding impact that affects all of the subsectors the same. So I think the biggest ripple effect we're seeing is just really due to the uncertainty.
The biggest effect is the unknown. When people in business are not sure what next is going to happen, whether there is a tariff coming into place or not a tariff coming into place, it brings a lot of uncertainty, and uncertainty really is a death sentence to a business. So you need to know how to plan for the future, and when you're not sure what next is going to take place, it's going to affect your ability to make decisions. And so there's a lot of uncertainty in that respect, which affects whether or not they're going to increase their prices immediately or not. And that can be very, very impacting on a business.
I don't think it can. Jamaica certainly isn't driving this. I think the way our government has handled it is the right way to deal with it. Is one, not to jump up and down in the media. The US administration has the right to realign its trade relationship as it sees fit. Jamaica's been a good trading partner to the US. At the end of the realignment, Jamaica is not disadvantaged against other countries. There are other countries in our region that are far more impacted than Jamaica is. So I think understanding that we are not driving this realignment, we're not going to impact what the US does with its policies, and we continue to be the partner to the US and to the other markets in North America, while we look for new markets that potentially may be less impacted than the US. So I don't think we're looking at something that a policy of our government can change. Certainly, we expect the government to work with the government of the US and try to minimize these impacts as much as it can, and that's going to happen both at the country level, and it's going to happen also at the CARICOM level. So that's my expectation of the impact of local policy.
I must say that due to our strong relations with our business partners and with the Ministry of Foreign Affairs with the other territories, I think Jamaica was fortunate that we were in the lowest tier of countries that were going to have a tariff implemented on us. So from that standpoint, I think we fared well. I'm not sure that there's any short-term policies that can be put into place now as it relates to our trading partners. I think our businesses and the business community have to be able to negotiate with their partners to assist with any adverse effects that may be happening with their businesses. For the long term, I definitely think as a country, we need to look at improving or extending to other territories, trade policies that would benefit for private sector to want to do business with other territories. We're very reliant on a few territories right now, and that doesn't suit us in these times of uncertainty. So I would encourage more effort for other territories in terms of trade policy.
Open to what those opportunities may be and collaborating with those who can help us to get either our raw materials at a good price with efficient freight, all of those things, and then get our finished products to market. So it's really the remaining aware, the collaboration, and then the looking to other markets that we can sell our products in.
So I'm in the business of fast-moving consumer goods. So I say to members within those industries that the more supply that you can have on hand is the better. It helps to mitigate some of the price increases and the shipping and logistic challenges. So being able to have a more supply on hand. I understand, with manufacturing, it's very difficult to maintain a long-term stock levels. So my response to that is to try and diversify your supply chain so that you have numerous suppliers, so that if one is unable to provide in a timely manner, you have others to follow. In relation to service providers, I encourage people to try and have longer service contracts with their suppliers. So, the good thing with Jamaica and the Jamaican business sector is that we learned a lot from COVID on how to manage some of these issues. And so, yes, the global trade wars are having an effect, but our ability to manage them is, I think, one of our assets as a country.
I expect that.
Sure, the cost of living overall.
Somehow. Indeed, yeah. Over the last year or so. But it has been going on for a long time. But I think even now, more than say a year ago, if you notice, every time you go to the supermarket, you have to carry a bigger checkbook. And to buy gas, buy service parts for your vehicle, electricity bill and so on, they go up each time,
Must be.
I think that affects gas to some extent, but it's not being reflected so, heavily on the rural market like it used to do in the past. I remember when they got the Gulf War and even the invasion of Iraq by the USA, prices for gas did soar, but it's not like that. We have a lot of disagreement now, yes, but it's not so severe. I don't think it's so severe. I just think things are just going up because of how the Jamaica economy respond to the rural. You understand? If the rural is advancing and you're not advancing, you're going to see an increase on your side of it.
Spend more.
No, everything changes sometimes, yeah. Yeah. I reckon it's affecting most people, especially the average people.
Yeah. Definitely. We'll have a cut back, Sometimes you used to eat 3 meals A day you cut back to 2 and sometimes 1. You don't really have a choice because if you don't have the money for buy the things, you have to do without it.
Yes, we can.
Yeah.
More money and make things better.
Well, it can be done.
Thank you very much. Wide views there from corporate Jamaica and from the man on the street. Okay, we're going to do the wrap. I want to say special thanks to our sponsors, GK Capital Management Limited. Please give them a round of applause once again. To our sponsor and representation on the panel, Tishan Lindo, Head of Business Development at GK Capital. Certainly to Don Anderson for the main presentation. Continue to do the good work, sir. The information is rich and it's really very impactful. 20 how much years we have now? We have 23, 24 years of information now. To Mark Williams, Chief CEO at Kingston Wharves, to Martha Miller, CEO National Rums, Mr. Sudhu Ramani, Chief Executive Officer, Hardware and Lumber. We thank you all for your time and for the input. The discussion has been very rich, very thought-provoking, and we hope that all your businesses will continue to find solutions to the issues around us and continue to offer good value to the customers. Thank you to the turnover for the accommodation, and have a good day, everyone.